Hey everyone, one question I get asked a lot is, how do I decide which stocks to trade? The first thing I look at is dollar volume, which is basically how much money is flowing in and out of a stock every day. That is the number one factor. Now you might be wondering why. Well, back when I worked at big investment banks, we always had to think about scalability. These firms trade huge amounts of money, and they need stocks that can handle large orders without causing big price swings. They don't want to push the price up just by buying, or drag it down when selling. But there's another reason too. High dollar volume stocks reflect real market sentiment. When millions of people are actively trading a stock, the price movements become more reliable and less random. That is super important when designing a trading system because we need large, unbiased data sets to make smart decisions. Now, some people ask, why not trade small cap stocks? Some of them, like GameStop or AMC, have really high trading volume too. The problem is, small caps are wildly unpredictable. A stock like that can jump or drop 10, 20, even 50% overnight, just because of earnings, news, or even a random social media post. The worst part? If a stock gets halted, you are stuck, and there is nothing you can do. Think about what happened with Enron. When a small company collapses, there is often no way out. Large cap stocks don't usually have these extreme risks, which is why I focus on them. So with thousands of large cap stocks out there, how do I narrow them down? I use a system I developed called Universal Quantitative Ranking, or UQR for short. This ranking method sorts stocks based on quantitative factors, helping me focus on the strongest ones at any given time. Here is how it works. Every week I rank stocks and focus on the top ones. If a stock is in the top 20, I prepare to buy it. If I already own it, I keep holding. If a stock ranks between 21 and 30, I don't buy new ones, but I hold on to the ones I already own, just in case they recover. And if a stock drops below 30, that is a sign to sell, because it is no longer a leader. This system helps me avoid buying weak stocks and ensures I am only holding stocks that are actually performing well. Now there is one extra rule. I don't buy a stock unless it jumps at least 10 spots in the rankings. That way, I know it is showing real momentum and not just moving around randomly. Another question I get a lot is, how many stocks should be in a portfolio? A lot of people think that owning more stocks means lower risk, but that is not really true. Dr. Van Tharp, a well-known investment psychologist, suggests that 30 stocks is the sweet spot. If you hold too many stocks, you start losing focus, and your returns begin to look like an index fund. But if you hold too few, one bad trade could hit your portfolio hard. 30 stocks is the right balance. It is enough to diversify, but still small enough to manage properly. You can track each stock, react quickly, and make better decisions. So to sum it up, I trade large cap stocks with high dollar volume because they are liquid and reliable. I use UQR rankings to find and manage the best performing stocks. And I keep my portfolio at around 30 stocks to balance diversification and focus. This approach keeps things systematic and disciplined. It removes emotions from trading and lets the numbers guide the way. I hope that helps. If you found this useful, make sure to like and subscribe, and let me know in the comments what trading topics you want me to cover next. Thanks for watching.